Time for our ETF spotlight. We are going to be taking a look at some emerging markets ETFs as the Turkish lira hits an all-time low against the dollar, and it does spill over into the broader emerging markets. Most specifically, of course, there is an iShares Turkey ETF tied to the stock index, the main stock index in Turkey. It is down by more than half its value year to date, down an additional 18% today. Obviously, this is just in collapse mode right now. The question has been for broader markets, does it touch off a chain reaction across other emerging markets equities? Not yet. Right now, the main emerging markets funds today are showing about a 2% loss. Now, that's far in excess of Turkey's individual impact on the EM indexes. Clearly, there's kind of a risk-off effect here. There's the Vanguard Emerging Markets ETF down 2.2%, VWO, and down about 8%. All of these down about 8% year to date. The EEM is the big one there. I always point out, by the way, that the big Chinese internet companies are the biggest holdings of EEM. So it's not really kind of a global trade, emerging markets, traditional type of a play. And the Schwab Emerging Markets ETF, all of these basically track these global indexes down about 2%. So it's a pretty good haircut, and you have seen tremendous underperformance by the emerging markets versus the U.S. this year, right? Down 8%. The S&P is up more than 6% year to date.
Yeah, when you look at the dollar, we just look at the dollar index.
Yes.
Dollar looks like it's been stronger this year. You pair the dollar against just emerging markets, and wow, it's taken off like a rocket. And you say, you know, this situation with Turkey probably reminds everyone just how exposed EM is to a strong dollar. It certainly wouldn't be as bad as what we're seeing with Turkey, but they are.
Oh yeah, the emerging markets currency indexes are looking pretty much highly stressed right now. Let's put it that way.